You guys literally only need these two things, and I guarantee you it will lead you to unlimited payouts through prop firms. Every single trader, every single influencer out there makes it seem like trading is so difficult and that you need a million different concepts and to learn all this ICT, and that is simply just wrong, and I'm going to prove it right here to you guys in this video. I'm going to show you guys exactly what this strategy actually entitles and how it is so effective with on-chart examples. First, actually, like, what is so special about this strategy? Why does this strategy allow us to get unlimited payouts? The first thing is it's really only 4 easy steps. So it's a very simple strategy. It also uses how that market actually moves. So it's not just based on pattern trades or nothing. It's how the market actually moves every single day. And then obviously this is a very big upside of it, is there is some trades that can allow you to get huge risk to reward upside. So let's hop straight into it and let's actually start to break down what are the actual 4 steps and how are we going to get these unlimited payouts using the PO3 and the inverse fair value gap. So let's break down, what does this entitle? What is the strategy? Our first step is simply what? We need to form a bias, and then we need to wait for a 4-hour candle. So you're probably confused about the 4-hour candle. Yes, you could look for PO3 and inverse at any time within the market, and it can work, but it is the most effective, and we will see it print the most times with the highest win rate when we are actually trading the open of a 4-hour candle. So to bring you onto the charts now, I'm going to be bouncing back and forth between the actual charts and pretty much what our strategy entitles so we can see a live example as we go through it. So what can we see here? We're on the 4-hour time frame. Obviously, there's a lot of accumulation here. What have we just done? We've pretty much kind of swept out this accumulation. We're starting to deliver to the downside. On the 4-hour time frame, what else can we see? We can see we just inverse this 4-hour fair value gap. So I hope you know kind of how to actually form a daily bias by now, but if not, at least me coming into this day, this looks very bearish, right? We look like we should come into the market today with a bearish bias. We're starting to break down, just inversed a ginormous 4-hour gap. So to me, this is a very bearish trend. And if we can remember, what was the second part of the first step? It was to wait for a 4-hour candle to open. So a 4-hour candle opens at 10 a.m. Eastern time. That is the first 4-hour candle that closes and then now opens in New York AM session. And that is where we find the most winning setups with this exact strategy. Now, once that 4-hour candle has opened, it brings me to step 2. Step 2 is literally the first part of that PO3. It is for us to actually look for accumulation. That is the first thing we want to see. And I'm normally looking for accumulation within the 1 to 5 minute time frame. To really understand how this PO3 actually works with the opening of a 4-hour candle, I would really need you guys to understand this. I'm going to break it down right now. This is how every single 4-hour candle moves no matter what. So we're going to get our open, right? Our open is right here. And what's it going to do? It's going to put in a bottom wick, and then it's going to distribute all the way up, and then it's going to end up closing. That's how every 4-hour candle moves, bullish and bearish, no matter what. So where do we see that accumulation? That accumulation usually happens right at the open of the candle. There is going to be accumulation right at the open of the candle, and that is what we're looking for. And you'll see this PO3 plays perfectly into this actual 4-hour candle, because if we accumulate out of open, what needs to happen next? We need to put in that bottom wick. So when we put in that bottom wick, what are we doing? That's our manipulation. And then what do we have to do? We have to play out the rest of the 4-hour candle, and that's going to be our distribution. That is the PO3. Now, to show step 2 on the charts in this actual example right here, this line is market open. So in market open, we can already see that we are bearish. That's the one good thing about waiting for this 4-hour candle to open right here at 8 o'clock, because we already get data before to know what the market's already doing. So this right here is already kind of confirmed our bearish bias, and we know that this looks good. And once our 4-hour candle is open, what are we looking for? We're looking for our accumulation. Accumulation can always either happen before the 4-hour candle open or after the 4-hour candle open. You can see right here, we kind of got a little bit of both. There's some accumulation that went right here. We pushed down, 4-hour candle opened, and we started to accumulate once again. So you can see this is looking pretty good. We kind of have a nice box of accumulation right here. And what did I say? I'm looking for accumulation anywhere between the 1 and the 5 minute time frame. So on the 1 minute, yeah, there's this leg within here, but like if we were to look at the 2 minute time frame, what can you see? This looks a lot more like accumulation, and the exact same thing with the 3 minute time frame. Yeah, it's trending down, but what are we doing? We've shown clear manipulation within here on the 1 minute time frame. If we didn't want to, we would have just continued to absolutely dump to the downside. So this is looking good, and it's looking like it's about to set up perfectly. I want you to note this and write this down, that almost every single time we literally see like the littlest bit of accumulation, it's showing that this setup is going to set up and it's going to most likely play out. Now this brings me to step 3, which is kind of one of the most important parts of this actual 4-step strategy, is wait for the manipulation. And we want this manipulation to either be some sort of like a lower time frame liquidity sweep, or we want to see it manipulate into a 15-minute fair value gap. And this is why it's so effective, because you pretty much get two outcomes that you need to look for. You need to look for one of these two, and if they're not there, then it's not there. But one of these two are there almost every single time. Real quick, before I show this on the charts, I just want to show you a visual so it's easier when we do hop on the chart. We already got our bias, we got our 4-hour candle open, and we got our accumulation. We have our accumulation within here. What are we looking for? We're looking for either that sweep or the tap into the 15-minute gap. So right here we have our lower time frame low. We're looking for it to come down, manipulate, and sweep this low. Our manipulation leg can be a sweep of this low, and then we're looking for it to deliver. Same thing over here. We have accumulation. Where's our manipulation? We're looking for it to manipulate into a 15-minute gap and then back out of it. Once again, real quick, remember this example, accumulation, put in that bottom wick. What's that bottom wick? That is our manipulation. So you can clearly see that right here. Accumulation, 4-hour candle open. That manipulation down is doing what? It's putting in that bottom wick of the 4-hour gap. Same thing over here. Accumulation, we're looking for that manipulation. Bang, that's the bottom wick of the 4-hour candle. So you're going to start to see all this come together and see that this is exactly how the market moves. Back onto the charts for our live example. Where is this? Our 4-hour candle opened right here. What is it doing? It's accumulating, and our bias is bearish. So we're looking for this to be putting in a top wick for the manipulation, and we're looking for either a 15-minute or a liquidity sweep. So where would our lower time frame liquidity sweep be? It'd be resting right here, or we're looking for a 15-minute fair value gap, and you can see right here there's a beautiful 15-minute fair value gap that was created out of market open. So maybe with this example we could maybe get a little bit of both, but we're most likely looking for just this 15-minute fair value gap confluence, because this isn't the most prominent like lower time frame liquidity sweep, because it's only one little high. It's not a lot of accumulation, but we will still be possibly getting both of these right here. So if we play this out, what can we see? Play the next candle. You can see we're starting to push up. We're starting to push up, and bang, we have now tapped into that 15-minute fair value gap. Doing what? We just created a leg up, putting in that top wick of this 4-hour candle and manipulating this entire box. So this clearly is showing us right now our manipulation, right? We have our yellow box, which is accumulation, and now our red box, which is pushed up and swept out this accumulation, tapping into our 15-minute fair value gap, giving us a manipulation. Now it just comes down to the fourth and the final step to complete this actual setup that is getting us unlimited payouts with prop firm. And that last step simply is see our entry confirmation and catch the distribution. And like you saw in the title, our entry confirmation is an inverse fair value gap almost all of the time, but I will say that you can look for CISDs too if there is no inverse fair value gap. But most of the time we are looking for these inverse fair value gaps because they are there most of the time, and they often give us better risk to reward and better entries than CISDs. But just write that down, remember that in the back of your mind, that even if there is no inverse fair value gap, you don't need to pass up on the setup. You can still look for CISDs. From there, I hope it's pretty self-explanatory to you guys of looking for the 1-minute inverse, but just to see accumulation, manipulation, it leaves behind a 1-minute fair value gap. Bang, we're looking for that inverse entry distribution. Same thing, pulling back to the 15-minute accumulation, manipulation into the 15-minute, inverse of a 1-minute out of it, distribution to the upside. Back on the charts, I do not know why, but my 30-second time frame is not working on TradingView right now, but we had a 30-second inverse right here, so we instantly want to get in this trade and we instantly want to enter. So entering off that inverse fair value gap, trying to get the best risk to reward. My stop is going at this high and my target is going at this low, because this is that bottom wick of that 4-hour candle we put in. No matter what, our first target should always be that opposite wick that we put in. Since we're looking bearish, our manipulation was up, so our first target is going to be that bottom wick of that 4-hour candle we put in. Obviously the opposite goes for bullish. If we were bullish, our first target would be the top wick of that 4-hour candle we put in. And if you're targeting more than just that candle wick, make sure you're at least taking partials here. But in this trade, I am only targeting down here to this low, because this is the next draw on liquidity. And if you guys do not know how to actually like manage your risk and know where to put your stop loss and actually what the next draw on liquidity is of where your take profit should be, I will put it in the link in the description below, is a completely free risk management plan where you guys can learn my exact risk management plan story, fully laid out. It's fully interactive if you guys do need help actually with your risk management. So just make sure you check that out if you are struggling. But now we got our entry, stop, and target. So it's just as simple now as play this trade out and let's see. Bang, we absolutely smack TP, and this is a perfect distribution back to the downside. Also, I do want to show you guys this too. With this trade, as you can see right here, there was a 2-minute fair value gap in our way, and there was also a 3-minute fair value gap right here in our way. So how do I attack that? Normally, I will just simply go break even at that 2-minute fair value gap, but if you want, you can still wait for those to get inverse. So that means our entry would be down here, and then at that point, I would have my stop loss here and target down here, and you can see it's still a 1.68 risk to reward, and we're catching 80 points. But with that first entry of that 30-second inverse, we're getting the best risk reward, we're getting the best entry, and this is a 2.83 catching 119 points. You can see this shit clearly played out exactly how I had it lined out. Accumulation, manipulation, plus the inverse fair value gap gives us what? It gives us our entire distribution to the downside. So now that you guys pretty much understand the outline and the basis of like these 4 steps and what we look for, I'm going to go into 2 more live examples fully on the charts, full breakdown, so we can see every single variable and exactly how we can repeat this day in and day out. Once again, what can we see? 4-hour time frame, looking for our bias. We're clearly in a fat downtrend on the higher time frame. And on the 4-hour, once again, we had another accumulation right here. And what are we doing? We're showing a clear breakout straight to the downside. I'm guessing we most likely want to target at least this draw on liquidity. So here we're pushing bearish. We did not respect this 4-hour fair value gap. We did not reject out of it. So my bias on the day is bearish. I'm most likely going to be looking for a bearish trade. Now we've waited for our 4-hour candle to open. You can see it opened right here at 8 a.m. for me. And what can we see happen? This is a prime perfect example. As soon as that candle opened, we literally went straight sideways and we built up extreme accumulation right here. Now, it's just as simple as we've waited through all this. We saw our accumulation form. Now we just need the manipulation. What can we look for? We've put in pretty much kind of 2 nice little equal highs right here. So we're looking for either a sweep of these or we're looking for a tap into a 15-minute fair value gap. So if we can look, what can we see if we go to the 15-minute time frame? Once again, we put in another 15-minute fair value gap at the open of market. So this is another example that can give us pretty much kind of both of exactly what we're looking for. Now we just wait, see if we pull back into this 15-minute gap or sweep these little internal highs, and we're accumulating, and bang, this right here pushes up straight into that 15-minute fair value gap and sweeps these highs. So accumulation and manipulation already there. Now we're just looking for, once again, our inverse fair value gap out of it to catch the distribution all the way to the downside. And this right here is a prime example of what I talked about earlier. There's not always going to be an inverse fair value gap sometimes. You can see there's no gap within here at all. But what do we get? We get a change in the state of delivery right here, breaking through all of these lows. So CISD, there's no inverse fair value gap. CISD, bang, enter there. Where's our stops? Our stops are going at these highs right here. Then I'm going to be obviously first targeting the low of that 4-hour candle, which is right here. And then my next draw on liquidity is this low resting all the way over here. And once again, if you do not know why I'm targeting here and here and why my stops are up at these highs, once again, just check out that risk management plan. People have told me that that is what changed their trading. And I know it has because that's exactly what changed my trading. So please check that out if you actually need help with that. And now it's just as simple as, once again, play the trade out and let's see what happens. And you can see this is an extremely fucking bearish day. We absolutely print straight to it just because we were able to wait for that 4-hour candle to open, accumulation, manipulation, distribution straight to the downside with our CISD right here. So it's literally as simple as that. And we were able to catch a 4.65 risk to reward, catching 161 points. Like I said at the beginning of the video, what is something that's very unique about this? It allows us to where sometimes we can actually get these home run trades and get big risk to rewards. This is a 4.6 risk to reward. That is more than enough. That is a banger ass trade on the day. So these are 2 absolutely perfect examples of this playing out. And I'm going to show you guys one more example that is a little bit more confusing and has some variables to it. But I'm going to show you exactly how we attack that every single day to know how to enter this even when it doesn't look 100% picture perfect. So with this last example, I shouldn't have to do too much explaining here, but this is clear cut, looks extremely bullish. Like, I want to break it down, but you guys should know this is a very bullish day. Our bias is going to be bullish. Dropping straight down to the 1-minute time frame, what do we see here? A shit ton of accumulation. This is perfect accumulation straight sideways, but this is leading up right to the 4-hour candle open. So bang, now the 4-hour candle has opened, and what are we doing? It looks like we're starting to push up. It looks like we're starting to manipulate to the upside. But then what do we start to see? We start to see even more accumulation within this 4-hour gap. So since we stayed patient and waited, this right here doesn't look like much of a manipulation of these highs because we pushed straight through it very impulsively. If we would have put in a top wick and then started pushing straight down, that would have been a manipulation. But you can see that we just blew straight through these highs. So we clearly did not fill orders for us to push to the downside to show that this was just our manipulation right here on this leg up. And also on top of it, what is our bias? Our bias is bullish. We're looking bullish, and market open confirmed it. Market open continued up. So why should we be looking to flip our bias instantly just because we saw these candles push up and take out these highs? Our bias is still bearish. Also on top of it, from our step 2, what are we looking for it to fill? Up here, you can see there's really no 15-minute gap at all relative. Yeah, there's one all the way over here, but we're not too worried about that. We're looking more in recent time because that's where the orders are getting filled right here and right now. And as you can see, what is there? There's a 15-minute bullish gap that was left over from market open once again. That is why this is so effective, because there's going to be 15-minute gaps left from market open like no tomorrow almost every single day. Now that we didn't really FOMO into this short right here, what do we have? We kind of have an entire extended range right here of accumulation, kind of just like that first example I showed you where there was kind of a little leg in between the accumulation. And if this leg really mattered, it would have just continued us all the way to the upside, but we continued to accumulate. So now what are we waiting for? We're waiting for our manipulation into that 15-minute fair value gap. And you can see, bang, look at that right there. That is the most beautiful manipulation we could ever see right now. Straight impulse move to the 15-minute fair value gap and taking out all these internal lows right here. And what does it show us? It shows us a straight bottom wick of rejection to the upside. So like I was talking about here, if this would have showed a top wick and rejection, we could have looked for it to the downside. But it continued and blew straight through it. So if these candles would have just blew straight through the 15-minute gap, we probably would have just printed all the way down. But what did we do? We are respecting our bullish bias and we put in a fat rejection wick. So this is showing us that this manipulation is looking to distribute all the way to the upside. Now it just comes down to, once again, our inverse fair value gap or our CISD. Once again, this is pissing me off, but my 30-second still is not working. We had another beautiful 30-second inverse right here. And even if you can't see the 30-second, what else can we see? We can see that we got a CISD here to breaking this high up here and also getting changed in the state of delivery right here. So no matter what, all of this is a perfect entry, but off this 30-second inverse, it's giving us the best entry possible. So I'm entering right here off this 30-second inverse. I know it sucks because you can't see it and it's pissing me off, but bang, my stops are going right here. And where's my target on this trade? My target on this trade is straight up to that high of the 4-hour candle, right? Because if we are going to distribute this 4-hour candle all the way to the upside, the first target and the first thing it's going to take out is that high that it has put in. And then with this trade, we've figured it all out. We got our risk down. We got our targets down. Once again, it's just as simple as play it out. So bang, you can see that manipulation played perfectly. We came down, showed a rejection, didn't fully reject, came down, remanipulated it, showed another good bottom wick, pushed up, 30-second inverse along with CISDs all in here, and bang, it absolutely printed straight to the upside, catching a 2.98 risk to reward, targeting 76 points. Even if you did miss this 30-second inverse right here or the CISD down here, you could have waited for this candle close. One, this is just a very impulse candle that you could have entered off of. Two, it was a CISD of this. And also it was an absolute edge of an inverse of a 2-minute fair value gap right here. And when candles close literally a tick away from inversing, to me, that is an inverse, especially when you're pairing it with our accumulation, manipulation, and this impulse candle. I'm entering on that, and you still are getting a 1.87 risk to reward with 62 points you're catching. So no matter what, there is multiple ways you can get into these trades. If maybe you missed the first quick entry, there's still so many more entry confirmations that can play out. And like I was saying, a lot of these trades have opportunities for huge risk to rewards to where maybe you do get a little bit worse of an entry, you're still able to catch these profits. Obviously, we don't want that. We want to learn this and get this dialed down to where we can get these best entries and these best risk to rewards. And that's literally exactly what me and my students have been doing, and why we've been printing these unlimited payouts is because we learn the system and we stuck to it. We've learned the strategy and we know it and we see it every single day. As soon as we see that manipulation, we're instantly looking for that first entry. And that is why my students are hitting me with so many just dubs and wins, because they're getting the best risk to reward, they're getting the best entries, and they're knowing exactly where to target. So if that doesn't sound like something that you're doing every single day, you can check out the link in the description below. I will have a link for my one-on-one complete mentorship where I actually teach these students and my students one-on-one, fully one-on-one. And that's why they're able to execute this with such high probability and such high win rate, because they're learning straight from me one-on-one, and we're solving all their problems of either maybe why they didn't enter this trade or why their entry was all the way up here instead of all the way back down here where they should have got it. So it's direct feedback, direct structure, and overall just accountability. So if you are interested in that and you actually do want to see a change in your trading so you can get consistent payouts, so you can stop blowing accounts, so you can start to see 5-figure months and start to see those unlimited payouts between prop firms, I teach this exact model and even more fully in depth. Because I'll tell you right now, I did not give away all the sauce on this exact setup and on this model on YouTube. I saved that for my students. So if you're interested in that and you are actually a dedicated trader that wants to change your trading and see consistency, check out the link in the description below and let's start changing your trading. And I look forward to possibly seeing your application come in to see exactly how I can help you and your trading. So with that, this is the full breakdown of the actual PO3 and inverse fair value gap strategy and system that I am using almost on a day-to-day basis. And if you liked this, if you learned something from this strategy, please, it would mean the world if you could like and subscribe. And if you could leave a comment of questions you have or what videos you possibly want to see next and what you're struggling with. So then 1, I can know that you guys like this video, and 2, what you guys need help with and what I can post in the future. So please, if you do not fully understand this right now and you made it to the end, rewatch it, get out a journal, write it down, and please just fully understand this because this is extremely effective and I use it almost every single day. So I will catch you guys in the next one. Trade safe and peace out.